Hey everyone, this is me Latoya from over at the Profit Room. Often get asked, how do I become an accredited investor? Well, that's why we provide the mentorship courses to help you navigate, to trade, and also to build your income up to the point where you have enough capital to be considered an accredited investor. An accredited investor, I'm on Investopedia, is a person with income exceeding over $200,000 in each of the two most recent years, or you can have joint income with your spouse exceeding over $300,000. Also, here's another criteria: you can have worth, right? Joint net worth with your spouse exceeding $1 million, but it's excluding the value of your primary residence. Also remember, there is no certificate at all. There is nothing such as paperwork that you have to obtain. Basically, the person or the company has to do their due diligence, right? There's no formality at all. You have to meet the requirements that the SEC has required to anyone selling anything. Has to be an accredited investor. So you have to go through a process of verification. Let's say you're funding someone's venture. You're going through private equity or a venture capitalist, etc., a firm. So they got to make sure that they do their due diligence on you, that you meet that income requirement or that network requirement. So that's one thing there. And there's different networks, right? There's all sorts of networks that angel investors have. There's advisors that will point you in the right direction, especially if you meet that requirement, to put you in positions to provide you that opportunity where you can invest in private equity startups. You can invest in companies that may one day want to go public. For example, LYFT. This hit the public market at $80-something, but whoever was an accredited investor that wanted the opportunity perhaps, or got the opportunity to invest in LYFT pre-IPO, probably got their shares at, let's say, $5, $6, right? That's one of the benefits of being an accredited investor. But here's the thing as well. An accredited investor also takes on that initial risk, because you do not know initially if that company will be a success. Just think about 50 Cent, right? When he invested in vitamin water and it got bought out, right? So he made all those millions. He is an accredited investor. Just to give you an example in case you're ever wondering, like, okay, where am I going with this? So let's dive into IPOs and why you should wait. Don't get sucked into that hype. Wait a minute. Let's talk about IPOs and when they are actually hit the market, when they debut. FEYE, FireEye, is a cybersecurity stock. I remember when this one IPO'd, there were a lot of hype. Traders were extremely excited and waiting for this one to actually open on the exchange. If we look at this candle, we can see the opening price is $40.30. The high it went was $44.89. Then the low was $35.28. Just imagine what went on during this period of time. traders probably participated by buying it, selling. Let's say they were able to get out at the highs, and then eventually the selling pressure started to dominate during this period, and it closed at $36. So the question that I often receive is, when do I buy something that was released on the market, an IPO? As a trader, I would say it all boils down to technicals. Now with FEYE, I generally say you have to wait at least for the first earnings report if you are an investor, long-term holder, if you're planning on holding a stock for a year or longer. Short-term traders, we don't necessarily need to wait until the next earnings report. We need to wait for confirmation of technicals. And hopefully I'll be able to break it down very simply. The high of this candle, the low of the price action, which I'm looking over here, just think we're trading sideways. Earnings came, probably wasn't that great of a news. It dipped. All right, we found a bottom. How we know it was a bottom? Because it did not hit any lows after that point. This low is lower than that low as well as that low. And then look, when do you buy? Simply break out of this channel. All right. As a trader now, we know that, okay, news highs, it must be in an uptrend. So when I move on, you can see how that played out up until, let's just go to the top. All right, till March. That's not a bad trend. From January till about March. That's a huge move. Just think about it. You IPO'd down here. This is when it was released, traded in a channel. As a trader, you will not touch this. As a swing trader, you will not touch this either. And swing traders know why. All right, finally breaks the channel. We started to trend. It went all the way up to like $97. That's a huge move from here to here. That's beautiful. That's about $40 a share. Let's round it. Now, also as traders, we know how to exit a trade, especially when the trend changes. All right, something must have happened here during this earnings report, but as traders, we could care less. We're just looking at price action. As a long-term investor, you have to know what is going on with the company, right? You must know the numbers, what's behind those numbers within the financial statements, etc. As a trader, we know that, okay, what goes up at times comes right back down, especially if it's a crappy company. Now let's zoom out and catch up to present to see exactly what occurred. Oh my, right? Broke through that price. So just think about those accredited investors. They have to hold a certain period before they can finally sell their shares, just the FYI. Another thing, as a trader with IPOs, at times you cannot short IPOs until maybe, I would like to say, a week or 2 weeks later. You have to wait until shares become available to you in order to short. So during this opening, a trader cannot do anything. You either buy or you sit on your hands and do nothing. Those are your only two options because you cannot short as of yet. So that's one example. Everyone loves Facebook, so let's go to Facebook IPO. All right, so Facebook. I know people love to use Facebook as an example. All right, so if you just sat and watched Facebook, right? Or if they will say, if you just sat and held Facebook and do nothing, of course. But just imagine those that don't really know much about the market. So Facebook debuted on the market, hit a high of 45. I remember this day because the underwriters or the market makers was trying to keep this above the initial IPO listed price. They had a hard time doing so, let's just say that. And then this thing fell apart. The next day, remember, traders, we can't do anything because we can't short as of yet, no shares available. And then this thing went down. Earnings came, it gapped down. And then it went down again. As traders, technical traders, remember, we know exactly when to buy. This gave us clues, right? Lows, we have earnings, but more so it has to do with the lows as well. Now, let's talk about a technical buy as well. Here goes earnings, huge move up. Question is, okay, as a swing trader or a trader, where would you buy? Just think of the last high within this area. This is what sticks out to me. You could consider it a swing high, right? Because you also have a swing high over here. So yeah, I want to buy when it makes a new high. And it happened to be after this earnings gap. It cleared the entire channel, as you can see. Boom. And then if I zoom out, so let's say you bought here, not necessarily to break up IPO high, because you also have to consider your downside risk. You bought here, where's your downside risk? Down here, right? I zoom out, let's look at Facebook. Facebook never looked back since, and I'm sure long-term investors did their due diligence on the type of company that Facebook is or was at the time and the amount of power, I repeat that word, power, that they have, right? It's crazy. Anyways, it's been in a uptrend. Beautiful investment, right? For a trader, this provided plenty of opportunities along the way. Long as in buying opportunities as well as shorting opportunities. Because remember, traders, we can buy and sell, short and cover. So we can capitalize off of both sides, both directions of the market. It doesn't matter. And of course, let's do another one. GoPro. I would never forget GoPro IPO. This was back around July. And this one was very interesting. We couldn't wait for this one to IPO. Lots of hype, right? Everyone was like, oh, we can't wait. And you can tell just by how this opened, how it closed. It looked much different from FEYE as well as Facebook opening and closes, right? This is bullish, green. Even though we do ignore the colors of the candles, it's more so about the opening and close. And look what happened after. You have upside. They absolutely wanted GoPro. They loved this during this time. Same thing here. We're looking at, okay, it broke up. This was a low point, but it never broke underneath the initial IPO low. So as an investor, hopefully you're thinking, you're doing your due diligence as well. You know exactly where to get in. You know enough about the company to take it long. Traders, you know what a trend looks like, so you know exactly how to take it long and also where to sell. Look at this. Traders, what we see here, we have a double top. Meaning, all right, it hit almost the same point twice and it did not break above. So traders, we know when to sell. Long-term investors, What's the consensus? What are the reports saying? What are the numbers saying? So let's zoom out to see what happened to this once upon a time $97 stock. Man, whew. All right, so we're now we're at $6.77. It got scary. This is almost a penny stock. I kid you not. So that's GoPro, which brings up last one. LYFT, LYFT. This company, Ernest and I, we went live during the IPO and we spoke about it on this very day. Lots of hype. We heard people, oh, I can't wait, we're gonna buy this. And hopefully this video helps with IPOs going forward, right? Between trading and investing. Wait until the hype dies down. Regardless of how they hyped it, what they say, you still need to wait until an earnings report. Because let's say you're so hyped and pumped and you bought this day. This thing opened at 87.24. It made a quick high, nothing significant, and it dropped all day long. We provided live commentary of, hey, we're not touching this, because remember, traders cannot short IPOs. There's no shares available for it during this period of time. It's not a buy. It was not a buy. And we can see how it just gapped. It gapped down the next day. All right, you have some short-term uptick, but it never recovered. Now we're down here. And to my understanding, currently as I speak, I think this is down again in after hours. So the moral of the story is, wait. If you're not an accredited investor, if you did not get this at $2 or $5 before it hit the public market or any other stock that IPO'd, and you're just getting into the market, you're learning, you're starting to invest, don't get sucked in by all the hype, because it kills the newbie investor. All right. As we always like to say, get educated, trade safe, and we look forward to seeing you in the profit room.